Welcome to my morning report chart appraisal videos on Tuesday the 18th of September with me, Richard Perry, market analyst at Hantec Markets. We've got an interesting move actually we've seen on financial markets today. There has been an announcement from Donald Trump. Finally, he's come forward and confirmed that they're going to put 10% tariffs on the $200 billion worth of Chinese imports. Now, this is important because obviously this continues to ratchet up the tensions in this trade dispute with China. Now, 10% of the tariffs are going to be in for the next few months, and then on the 1st of January, that's going to rise to 25%. And he's also suggested that if China retaliates, they're going to look at the final $267 billion worth of imports being tariffed. So, really, really strong words there from Trump. However, look at how the markets have responded. What we have seen. Not at all. That's not what I wanted to show you. What we've seen is, across the board, the dollar has not really strengthened. Look at how the dollar has played out against the commodity currencies. Aussie, Kiwi, both higher. The Canadian dollar is stronger. And also, interestingly, the euro is basically flat. Now, the dollar hasn't really got any traction on this. Now, historically speaking, the dollar has gained traction off this trade dispute. And it's interesting that the dollar has basically gained no traction at all. You see, look at the Chinese yuan, only slightly weaker against the dollar today. So there's been a really interesting sort of take from this move that the markets are actually fairly risk positive. Look at the Asian markets, the Nikkei 1.4%. If I scroll down to the China B index, which is not here, annoyingly, China B index is 1% higher. So it's a really interesting move that we've seen in these markets that has actually felt fairly risk positive in the response. Now, could this be that the US is now sort of ratcheting it up to an extent that is actually negative for the dollar? And it could be that we're seeing the moves on the back of that. Now, gold is basically just pretty much not a million miles off, flat on the day, just $2 down, 11.98. So it's still sort of playing around with that 1200 level. Interesting that oil is slightly ticking lower. Very much in consolidation mode, really, oil in the recent couple of days as the market has unwound some of that upside or volatility, I should really say, from the hurricane moves. But interesting that we are seeing that the dollar hasn't really gained on the back of this Trump decision to go for the tariffs. So, how does that sort of look in terms of our chart of the day? The dollar Swissy. Dollar Swissy is continuing to fall away. We've seen the Swiss franc strengthening against the dollar in recent couple of months, really, since that move failed at 10068. Completing the top pattern breakdown, that implied about 200 odd pips of downside move, 280 pips of downside move, and that implies 95 big figure. Now, 95 big figure is where the next real support comes in, and the market continues to continues lower, has been consolidating in this move sideways for the last sort of 3 weeks or so, breaking down on that consolidation. Again, you measure the height of that consolidation, 97.67 down to 96.40 area, so again around about 120 pips, and again, what does that imply? Well, not a million miles off 95 big figure. So it's all sort of all coming towards a retreat towards 95 big figure on the technicals. Look at these momentum indicators. RSI falling back away again, MACD lines bear kissing lower, and also the stochastics negatively configured. It certainly looks as though rallies are a chance to sell on this on the Swissy, on the Swiss. On dollar Swiss, and the Swiss franc is set to continue to strengthen it against the dollar. Now, you've got the overhead resistance at 96.40 up towards 96.80 from yesterday's high, and nice little sell zone that now, I think, of any unwinding move that you can see. And you can see here that on the hourly chart where 96.30 has been a bit of a pivot overnight. 96.40 was the old range lows, and then, as I said, 96.80. So any intraday rally, I think, is a chance to sell, because I think this one's going to continue lower, and you've got the downside potential on the RSI. I did sort of mention in the morning report that you've got to be careful. I suppose the one main caveat would be if the market sort of flipped higher from here, that would be a positive divergence on the RSI. However, it certainly doesn't look as though that is going to be the case looking at the MACD and stochastics. So you're still sort of looking to sell, I think, into strength on dollar Swissy. So with that in mind, I wish you good luck in your trading today, and I will speak to you later.